IDT as well as law, right? That's what we find. So that's the reason before we start with the case studies, we'll first understand the overview of those subjects. And those who are attending group 2, anyhow, we have learned GST exhaustively, correct? We have just discussed. So it will act as a revision for us. We'll quickly revise. Okay, so we'll not go in depth, obviously. It's an overview and it helps our IBS exclusive IBS friends also, so that we can connect during case studies. And for others, obviously it's a revision, right? It helps us, especially for those who are writing in May 24. Okay, so we'll quickly start. We'll start with the first chapter, supply, right? What is the taxable event under GST? It's supply. Am I audible properly?
Yes, sir.
Yes. Now, under CGST Act, Section 7 talks about supply, right? We had the 7(1), 1A, 2, and 3 subsections. So, subsection 1 contained 4 different discussions. 7(1) says supply includes 7(1)A, 3 conditions, 3 parameters: supply, consideration, in the course of furtherance of business. So, only if these 3 conditions, supply of goods or services or both, for consideration in the course of furtherance of business, SCB, if 3 conditions or 3 parameters are satisfied, only then it will be considered as supply. Right? That's the principle based on which the concept of supply is derived. However, there are some exceptions. Right? In some cases, even if any of the 2 parameters are satisfied, it will still be considered as supply. The exceptions are there. Yes. So 7(1)A, strictly 3 conditions. 7(1)AA is an extension of 7(1)A. Right? 7(1)AA said for services or activities carried out by an association to its members, if it is for consideration, then it is considered to be a supply. Right? Business test is brought in that provision itself. So there in 7(1)AA also three parameters is just a clarification for association to its members. So removing the concept of mutuality. 7(1)B talks about import of service. But the point here is business test is excluded. Even if business test is not there, even if that import of service is not for the purpose of business, it would still be a supply provided it is for consideration. So 2 conditions to be satisfied. Point number 1, it should be a supply. What supply specifically? Import of service only. Import of goods not covered. So import of service for consideration, irrespective of whether it's used for business or not, it will be supply under 7(1)B. 7(1)C we discussed that certain cases specified under Schedule 1, even if it is without consideration, it would be a supply provided the other 2 conditions are satisfied. It should be supply and should be for the purpose of business, in the course of furtherance of business. Correct? So other 2 conditions have to be satisfied. Even if it is without consideration, it will be considered as deemed to be considered as supply. That is what 7(1)C said. In Schedule 1, we had 4 discussions. 4 points, 4 paras. First one was permanent disposal of business asset. The condition there is when it will be considered. Yes,
ITC.
be availed, right? Only if ITC is availed, it comes under the Schedule 1. Second was between transactions between related persons and distinct persons. There is a definition given for related persons, correct? The control related. Then we had common directors, common partners related discussion, family members, right? So family also we had discussed the definition. Spouse and children always, brothers, sisters, and parents only if they are wholly or mainly dependent. Correct? Only then they come under the definition of family. So these are related persons. Who are distinct persons? Same entity, establishments of same entity in different states or in the same state. In different states, even if the one of the other entity can be unregistered, right? One entity should be registered, the other entity can be unregistered. If they are in 2 different states, they are distinct persons. Whereas if they are in the same state, they'll be considered as distinct persons only if both are registered. Similarly, establishments of the same entity, one is in India, one is outside India, that also comes under the concept of distinct persons. Understanding? Yes, right? That was the second one. Then there, related persons, in related persons definition, we had employer-employee. We all know that services provided by employee to employer comes under Schedule 3. It's not a supply. Salary, no GST. Whereas services provided by employer to employee doesn't get covered under Schedule 3, may be considered as supply, subject to other conditions. In that, gift provided by employer to employee, right? It directly comes under Schedule 1. So for that, they have given 50,000 limit. Correct, 50,000 limit specified. Yes. So that was the second one. Third one, service transaction between principal and agent. Here, only supply of
Goods.
goods. Yes, only supply of goods, not service. Supply of goods between principal and agent, where agent undertakes to supply such goods to the customers on his invoice in his own name, or receive goods from the vendors on behalf of the principal in his own name. Right? Only then it will be deemed to be a supply. Which transaction will be deemed to be a supply? Supply, that is transfer of goods from principal to agent, or transfer of goods from agent to principal. That transaction would be deemed to be a supply, because that would be without consideration. From agent to customer, or from vendor to agent, it would be for consideration, obviously. Correct? That was the third one. The last one, again, we discussed about import of service here. Right? 7.1b also we discussed import of service. Here again, import of service without consideration between
Related persons.
yes, related persons or establishments outside India in the course of furtherance of business. Right? That's the difference between 7.1b and 7.1c Schedule 1. Right? So there it should be for consideration. So if import of service is for consideration, always a supply. If import of service is without consideration, it would be considered a supply only if two conditions are satisfied. Condition number 1, it should be in the course of furtherance of business. Condition number 2, such import is from a related party or establishment outside India. Only then it would be considered as supply. Correct? That's what we learned. Right? So this was Schedule 1, 7.1c. Then 7.1a, what did we discuss? 7.1a, classification of goods and service, Schedule 2. Correct? So there were various lists that we looked into, of which the gist is, whenever there is transfer of title, it would be supply of goods. Transfer of ownership, it would be supply of goods. Whereas it is just transfer of possession, right to use, then it would be supply of services. Right? Renting of immovable property, those are supply of service. Whereas transfer of title can be now or can be in future. For example, sale on approval basis. Even that comes under supply of goods. Correct? Then special discussion about immovable property. That para 5b of Schedule 2, sale of building. Right? Sale of building related, it would be considered as supply only if a part of the consideration at least received before
CC.
certificate or first occupation.
Very
First
good. Date of CC or first occupation, whichever is earlier. Right? That event before, at least part of the consideration should be received. Then it would be supply, specifically supply of services. Supply of services. If not, if the entire consideration is received after date of first occupation or completion certificate, whichever is earlier, then it is not a supply. It comes under Schedule 3. Correct? Yes, that's what we discussed, and these were some of the discussions that we had in Schedule 2. Then we went on to 7.2, which says supply excludes the activities provided under Schedule 3. Right? Activities provided under Schedule 3, we had multiple lists there, multiple discussions. First one was employer-employee, services provided by employee to employer. Second, services provided by court or tribunal. There, not all tribunals are covered. Tribunals which are established under any law. Correct? Therefore, arbitral tribunal doesn't come under that discussion. It comes under RCM. So it's not established under any law. So not recognized. So tribunal should be recognized. For example, NCLT, GST 80, IT 80. These are tribunals recognized or established under any law. Therefore, Schedule 3 comes into picture there. Then public servants, functions performed by MPs, MLAs, panchayat members, municipality members, duties in the constitutional post, right? President of India, Chief Justice of India, correct? All those comes under Schedule 3. Then funeral, burial service, including transportation of deceased. Then we had a discussion about what was the next one? That is sale of land. Sale of land always, sale of building, if not included in para 5B of Schedule 2. Then actionable claims related. Actionable claims other than specified actionable claims, right? The new term that they have introduced with effect from October 23, other than specified actionable claims. So other than specified actionable claims, all other actionable claims, not a supply. Specified actionable claims comes under the ambit of supply. Specified actionable claims, 6. Earlier we had 3, lottery, betting, gambling. 3 more they have added, casinos, horse racing, and online money gaming. Online gaming, correct? So specifically valuation related also, there are introduction of valuation rules additionally for casinos and online money gaming. So now there are 6 actionable claims which comes into the ambit of supply. So other than that, all other actionable claims, not a supply. Correct? Then the next we had the 3 international transactions. First one was merchant trading. Second one was in-bond sale. Third one was high sea sales. Correct? These 3 terminologies. First one, what is merchant trading? I purchase from US, I sell it to China directly without bringing into India. That is merchant trading. So here goods doesn't come into India at all, not a supply. Second, in-bond sales. Yes, I have brought into India. It's there in the customs port. I have not cleared it for home consumption. Now I'm selling it to someone else, Mr. B. That is in-bond sales. Third one, high sea sales. Yes, it was coming from US. Somewhere in between in the ship itself, I transferred the title to someone else. It has not yet come into India. That is high sea sales. All the 3 are outside the scope of supply because of Schedule 3. Are we clear? Yes, till here, everyone. This is section 7, correct? There, we also discussed the 3 definitions: goods, services, and consideration, which we missed to revise now. Goods, 2 clause 52. Goods means all type of movable property, correct? All kinds of movable property. Additionally, 2 things will be included. One is actionable claims. Second one, growing crops which are agreed to be severed before or at the time of supply. Then it excludes money and securities. Coming to definition of service, service means anything other than goods. However, it includes use of money and conversion of money from one currency to another, from one denomination to another, where consideration is charged, and excludes money and securities. So money and securities are neither goods nor services. When I say consideration, the other definition, when I say consideration, consideration can be in the form of money or money's worth. Will security or advance or a deposit be considered as consideration?
Only if
it's
applied.
applied to the service.
Yeah, only if it is applied to the service, specifically deposit, security deposit, etc. Only if it is non-refundable. If the deposit is refundable, then it will not be part of consideration. Yes, and so consideration, yes, should be received from the recipient, but it need not always be. Consideration can be received from other person also, a third party as well. That would still be added to the total value of consideration. Clear? Yes, these are the discussions that we had. Yes, the material would be shared. It's still, we're still fine-tuning it. So these are the discussions that we had. I think we have discussed everything: goods, services, consideration, important aspects. Import of service 7.1b we have learned. This summary if required. 7.1a and 7.1aa, all the 3 conditions to be satisfied. 7.1b, supply and consideration. 7.1c, supply and business. This should be this should also be considered. Yes, so the 3 parameters. normally should be satisfied. For consideration exception is schedule 1. For not in the course of furtherance of business exception is 7(1)(b). For all the 3 exception is schedule 3. Meaning in case of schedule 3, if all the 3 parameters are satisfied, still not a supply. Correct? Still not a supply. Yes. So these are the discussions that we had. Till here, anyone has any doubts? This was import of service. With consideration in the course of furtherance of business or not, it will always be a supply. Without consideration, related persons in the course of furtherance of business, then only it would be supply. Everyone clear?
Yes, sir.
Yes. Others, those who are attending it for the first time, understanding, following? Yeah. Okay, fine. So we'll move on to our discussion further. Now, just because it's a supply, we cannot say it's a taxable supply. Correct? It need not be. Right? When do we consider it as a taxable supply? It will be leviable to GST only if 2 conditions are satisfied. First condition, it should be made by a taxable person. Second condition, it should be a taxable supply. When do we say it is made by a taxable person? Who is a taxable person?
Registered or liable to register.
Yes, who is registered or liable to be registered. Right? If he is liable to be registered but not registered, still he is a taxable person. Right? So it should be from a taxable person, and it should be a taxable supply. When it is a taxable supply, if it is not exempt. What is exempt supply? It contains 3 discussions. Exempt supply means supplies which are taxed at nil rate, supplies which are wholly exempt from tax as per section 11 of CGST, and what was the third one? Non-taxable supplies, right? Alcoholic liquor, petroleum products, which are outside the ambit of GST. So all these are included in exempt supplies. Anything other than that is taxable supply. Simple, right? That is section 7. Now in the same chapter, we had one more section, section 8, which spoke about composite supply and mixed supply, right? With the definitions individually of composite and mixed. In case of composite and mixed supply, to come into the discussion of section 8, there should be 2 or more supplies combined together and delivered. That, right? That's the first condition. Second, there should be a single consideration charged. Only then we can come into section 8. Once we come into section 8, for that particular supply, we have to see whether it is naturally bundled or not, and whether there is a principal supply or not. 2 conditions. If it is naturally bundled and we have a principal supply, then it is
Composite.
Composite supply.
correct. Then it is composite supply. If it is not naturally bundled and there is no principal supply as such, then it would be mixed supply. What is the difference? The applicability of tax rate. Correct. In case of composite supply, it's the rate applicable to the principal supply, whereas in case of mixed supply, it would be the highest rate. This was section 8. Clear? Right? These were the important discussions that we had in the first chapter. Then we went on to the second chapter where we discussed about charge. Specifically 2 sections again, section 9 and section 10. Section 9 talks about charge. It has again 5 subsections, 1, 2, 3, 4, 5. 9.1 discussed about forward charge. Correct. Section 9, since it is of CGST Act, section 9 said all intrastate supplies. Section 5 of IGST Act talks about interstate supplies. So 9.1 said tax on all intrastate supplies will be CGST and SGST. This is under forward charge. Maximum tax rate under CGST being 20%. However, it excludes alcoholic liquor for human consumption. So this is where alcoholic liquor for human consumption is outside the scope of GST, right? Proviso to 9.1. It says alcoholic liquor for human consumption is not no GST can be levied as per 9.1. That's what it says. 9.2 petroleum products. As of now, it is not applicable. However, central government, by the recommendation of council, can notify a date from which petroleum products comes under the ambit of GST, where it is given 9.2. 9.3 talks about RCM. 9.4 also talks about RCM. 9.5 extended version of RCM, e-commerce operators. Correct. These are the things that we learned. Yes. Now 9.3 RCM is through notification. There is a detailed notification. There are two, one for goods and one for services, of which services are extremely important for us. RCM 9.4 RCM is the amended version wherein notified supplies services made by unregistered person to registered person comes under this. One of that notified supply or notified service is
Real estate.
yes, real estate sector. In case of real estate sector, if we remember, we had discussed a tax rate applicability. Concessional rate of tax 1%, 5%. Correct. If it is for affordable houses, 1%. If it is for other than affordable houses, 5%, including commercial complex inside that RREP. Right. Then 5% would be applicable. However, this would be applicable subject to conditions. One of the conditions was if 80% supply, inward supply from the registered person condition doesn't doesn't get satisfied, then that such shortfall should be paid under RCM. Where it is coming from? It's coming from 9.4 notification. Correct? So 9.4 notification, one of the services notified is, yes, real estate. Then 9.5, in case of supplies made by suppliers through e-commerce operator, there are 4+1 supplies notified, for which 9.5 applies, wherein e-commerce operator himself will pay tax, not the supplier. Right, e-commerce operator themselves will pay tax. We have a separate chapter called e-commerce transactions. We'll discuss about those services going forward. Okay, when we discuss that. Yes. So this is section 9. Clear with this?
Yes, sir.
Yes. Having said that, when do we consider a supply, or how do we classify a supply as interstate, intrastate? It depends upon place of supply. Correct. When location of supplier and place of supply same state or union territory, that is intrastate. If they're in different states or different union territories, or one state or one union territory, that is interstate. Imports and exports always interstate. Imports and exports always interstate. Clear? Yes. Then coming to this RCM discussion. Right, RCM related to services, related to goods, we have a small certain list. Okay, list of goods. Those in such cases, they have given who is the service provider, who is the service recipient. For them, RCM would be applicable. So no conditions, no restrictions as such. So simple, straightforward. Whereas in case of services, there are some conditions, applicability related discussions. So complicated discussions. That is the reason examination hot topic, right? Normally asked in the exams. Yes, there are various RCM discussions. To start with, we'll start with the first one, GTA, goods transport agent. Now, with regard to goods transport agent, simple discussion, we need not complicate things. To whom that GTA is providing that service to. Okay. That determines. Before that, there is something called, there are certain specified services under exemption chapter, like defense related, flood relief related, natural calamities related, newspapers, etc. They have given a list. So we call it, for our understanding, specified services. If it is specified services which is being transported by that GTA, irrespective of to whom they are giving that services, always exempt. Right? Whereas if it is for other persons, other services, if it is for other services, then we have to look into to whom they are providing. If the recipient is specified persons, right? Specified persons, we have the list there: factories, cooperative societies, companies, body corporate, partnership firm, right? Any GST registered entity. We have list of specified persons. If recipient is specified person, recipient is others. If recipient is others, exempt. If recipient is specified person, then GTA has two options. One, opt for forward charge, or do not opt, not opting for forward charge. If they do not opt for forward charge, it comes under RCM at the rate of 5%. If they have opted for forward charge, then there are two rates. One is 12% with ITC, 5% without ITC. Right? However, even though specified persons include all GST registered persons, if such person has only TDS registration, no other, not regular registration, only TDS registration, then no RCM. Then no RCM. Are we clear with this? Related to GTA, simplified version. Right, the next discussion that we had was legal service. In relation to legal service, when RCM comes into picture, only if it is provided to
Business entity.
business entity, not registered person, correct? Business entity. Whereas when we discussed in exemption chapter, we learned if that business entity's turnover is within the threshold, then no RCM. So only turnover exceeding the threshold. Then RCM in all other cases, that is business entity within the threshold, non-business entities, it is exempt. In all other cases, it is exempt. Are we following this?
Yes, sir.
Yes. Similarly, one more we learned about sponsorship service. Regarding sponsorship service, there what we learned was service provider can be any person. Any person, whereas service recipient should be body corporate or firm. Body corporate or firm, RCM, else what happens?
FCM.
Yes,
Forward
very good.
charge.
Forward charge, yes. Else it is forward charge mechanism. Right, that was sponsorship service. Then we also discussed about renting of immovable property by government departments. Renting of immovable property by government departments. There RCM applies only if service recipient is registered entity, right? This is one case where RCM applies when it is a registered entity. Normally, the term that we use is business entity. Even in case of services provided by government, in all other cases where RCM applies, there it is business entity. Only in this case, in renting of immovable property, the word used is registered entity, then RCM. If not, forward charge. If not, forward charge. Clear till here?
Yes.
Yes. Similarly, one more. Renting. Renting of immovable property. We can divide this into two. One residential, second commercial. Commercial property comes under forward charge. Correct? Comes under forward charge, and it depends on the registration requirement of yes, service provider, the supplier. Whereas residential property, here it depends on the registration requirement of the recipient. If recipient is registered, then RCM, else
Exempt.
exempt. Very good. Else it is exempt. So it doesn't mean that whenever the recipient is registered and he takes a residential premise or dwelling on rent, RCM applies. No, there is one exemption given. Correct. For a sole proprietor, if he take being registered person, if he takes a residential dwelling on rent for his stay purpose, for his personal stay purpose, then no RCM. Right? That clarification is there. Yes. Then remuneration to director. Director service remuneration paid to the director. Here, there is a recent clarification which specifically says only those consideration that we are paying in relation to service provided by him in the capacity as a director gets covered. Right? Here, when RCM applies, it depends on whether the director is an employee director or non-employee director. Right? If he is an employee director, like managing director, manager, whole-time directors, they're all normally employees. So employee director, then TDS happens under section 192, employer-employee relationship schedule 3, so no RCM. If he is a non-employee, meaning non-executive director, like independent director, right? So non-executive director, for him, now if remuneration paid TDS happens under 194J, so RCM. Right? Example, sitting fees paid. For that, it is normally paid to non-executive directors. So it comes under the ambit of RCM. Then we also discussed about right to use, specifically copyrights related. In copyrights related, we had two discussions under RCM. One was related to artists, that is music, composers, photographers, etc. And the other discussion was author. Both will have copyrights. Now, artists, music composers, photographers, compulsorily RCM. Compulsorily RCM. Whereas in case of authors, RCM applies only if author has not opted for FCM. Right? For author, he has an option to choose forward charge, similar to GTA. If he has not opted for a forward charge, reverse charge applies. Understanding?
Yes, sir.
Yes. Then one more discussion that we had, direct selling agent, DSA. Direct selling agent providing services to whom? Banks, financial institutions, including NBFCs. It will come under RCM only if DSA is other than body corporate or a firm. Right? If DSA is a body corporate or firm, forward charge. If it is other than body corporate or firm, reverse charge. So individuals, HUF, if they are providing direct selling, if they are acting as a DSA to a bank or financial institution or NBFC, then RCM. However, if the same individual or HUF acting as a DSA to other than a bank or financial institution or NBFC, no RCM. Right? So service provider, service recipient, both specific here. Understanding? Yes, anyone writing this? It's there in anyhow, it's there in the material shared. Just in case. That will be shared rather, material that will be shared. Next, security services. In relation to security service, first we have to check who is the supplier. If supplier is body corporate, then forward charge directly. If supplier is other than body corporate, then you have to see who is the recipient. If recipient is registered, then forward charge. If not, reverse charge. If not, forward charge. So when will reverse charge apply for security service? supplier being non-body corporate, recipient being registered. Then RCM applies. Same principle, same approach we have to apply in case of renting of motor vehicle. Renting of motor vehicle, first point is RCM applies only if the vehicle is at our disposal. Second point, cost of the fuel should be part of the consideration itself, should be part of the invoice, cost of the fuel. If these two conditions are satisfied, then comes into this discussion, comes into this chart. What did we do for security service? We check who is the supplier. Correct? Same approach. Supplier is body corporate. Forward charge straight away. Supplier is other than body corporate. Then we have to see who is the recipient. Recipient, there we were looking at in security service, registered, unregistered. Here, body corporate, not body corporate. If recipient is a body corporate, supplier is non-body corporate, recipient is body corporate, RCM. If recipient is also non-body corporate, forward charge. Forward charge. When I say forward charge, again similar to GTA, they have two options. 12% with ITC, 5% with limited ITC. When I say limited ITC, ITC related to same line will be allowed. ITC related to same line of business, meaning purchase of car. Right? Why they are using it for taxable supply of transportation of passengers. Therefore, it is allowed. So, same line. Whereas in GTA, 5% without ITC straight away. No limited ITC concept there in GTA. Whereas here, yes, they have the concept of limited ITC. Clear? Yes. Whereas for reverse charge, it is 5%. The rate of tax is 5%. Any doubts till here?
No.
No, these were special cases of RCM entries where there are conditions, restrictions as such. Right? Other than that, there are few more RCM entries like services supplied by arbitral tribunal to business entity, arbitral tribunal supplier, business entity recipient. Right? Then services supplied by central government, state government, union territory, local authority to a business entity. That is where I said in case of renting of immovable property by central government government department, registered person. In all other cases, we use business entity. Then supplies made by central government, state government, union territory, local authority, other than Ministry of Railways. Here also we have that exception. We had exceptions where RCM doesn't apply for services provided by business entity, government department to business entity. One is Department of Post. Second, Ministry of Railways, new addition, correct? Indian Railways. Third one, related to airports or vessels. Fourth one, transportation of goods or passengers. Correct? These were the exceptions that we had there. There, forward charge will be applicable. Then, services supplied by an insurance agent to any person carrying on insurance business. So, an insurance agent, service providing to insurance company. Services supplied by recovery agent. Recovery agent only to a banking company. Right? Only to a banking company. Here, banking company includes NBFC, banking company, financial institution, NBFC. So, a recovery agent providing service to others, forward charge. Forward charge will be applicable. Then this we have discussed, music composer, photographer, artist. Then supply of service by members of overseeing committee to RBI. In RBI, there is one committee called overseeing committee. Services provided by such overseeing committee to RBI comes under RCM. Business facilitator and business correspondent. Beautiful discussion. Now, business facilitator and business correspondent. These are two persons who provide services to banks and insurance companies. Okay. Now, most of the cases, they provide this service where in rural areas to ensure that banking facilities reach to the nook and corner of the country. So there, services provided by business facilitator to the banking company, RCM. Services provided by business correspondent to banking company, forward charge, no RCM. Whereas services provided, see, business correspondent cannot go everywhere. He would appoint his agents. Services provided by agent of a business correspondent to business correspondent get covered under RCM. That's the difference between business correspondent and business facilitator. Applicability of RCM. Clear? Yes. Then one more last one, securities lending scheme as 1997. So in that, if someone lends a security, borrower is liable to pay tax under RCM for the fees paid by him to the intermediary. Fees paid by him to the lending fee that they call lending fee paid by them to the intermediary. Okay, this is the notification which is there in CGST. Same notification is there in IGST also. In addition, in IGST there is one more entry, import of service. Correct? Import of service also comes under RCM. However, there are some exceptions, OIDAR, etc., which we'll discuss going forward. OIDAR, online money gaming related discussions are there in that. Yes. After this, 9.5 again we'll discuss later. Classification of goods, classification of service, goods, HSN, service, SAC. Why? Basically to determine tax rates. Right? Classification is made to determine the tax rate specifically. There are various rates prescribed. We also discussed about concessional rate for real estate. Right? No ITC will be allowed, and 80% of their inputs and input services shall be from registered persons. If not, balance shortfall to be paid under RCM. Yes, this is section 9. Any doubts till here? No. The next section in this chapter, section 10, composition scheme. Right? It's a what do you say? A concessional scheme or a beneficial provision given to small taxpayers. There are two provisions under composition scheme, 10.1 and 2 and section 10.2a. 10.1 and 2 applies to providers of goods plus restaurant service. 10.2a is for services other than restaurant service. Correct? Now, with regard to 10.1 and 2, what is the turnover limit? Composition scheme, turnover limit?
1.5
crores.
1.5 crores. Yes, it is 1.5 crores. However, for special category states, 75 lakhs. Special category states, there were 8, right? UNSATM Uttarakhand, Nagaland, Sikkim, Arunachal Pradesh, Tripura, 3 M's, Meghalaya, Mizoram, and Manipur. 3 M's. So for these states, it is 75 lakhs. For all other states, 1.5 crore in the preceding financial year. If the turnover is below 1.5 crore or 75 lakhs in the preceding financial year, then in the current year, you are eligible. Up to what limit? Up to 1.5 crore or 75 lakhs in the current year. So if in the current year it exceeds that limit, from the date it exceeds, you are ineligible from composition levy. You have to convert to regular scheme. Whereas for 10.2a, what is the turnover limit? Services?
50 lakhs.
Yes, 50 lakhs. 50 lakhs in the preceding financial year, then eligible up to 50 lakhs in the current financial year. For 10.2a, tax rate is 6%. For 10.1 and 10.2, tax rate is 1% for manufacturers and traders, 5% for restaurant. But the difference between manufacturers and traders is, for manufacturers, it is 1% of the turnover of the state or union territory. For traders, it is 1% of
taxable turnover.
very good. Taxable supplies, taxable turnover in that state or union territory. So if a manufacturer is manufacturing taxable goods and exempt goods, 1% applies on total. Whereas a trader, if he is dealing in both taxable and exempt, 1% applies only on taxable. Right? We had in regular class, if those who remember, we solved a problem also on that. Correct? Yes. Then here when we are talking about 1.5 crore, 75 lakhs, 50 lakhs, that is aggregate turnover as defined in section 2 clause 6. Aggregate turnover includes taxable supplies, exempt supplies, interstate supplies, export of goods or services, However, it excludes inward supply liable for RCM and taxes taxes under GST, CGST, SGST, IGST, compensations, etc. will be excluded. Right? This is about section 10. Having said that, even though my turnover is within that turnover threshold limit 1.5, 75, 50, there are some ineligible cases where we cannot go for compensation scheme. Right? Whenever we have interstate supplies through e-commerce operators, yes, for goods they have given some clarification, some exemptions, relaxations now. Then manufacturers of some items, ice creams, tobacco, etc. They have given various bricks, correct? So there it is ineligible. Then CTP, NRTPs, casual taxable persons, non-resident taxable persons, compulsory compensation scheme not allowed. For 10, 1 and 2, supply of service provider cannot go into that. Right? He can go only to 10, 2A. Correct? Because 10, 1 and 2 is applicable only for goods. The only service that is allowed there is restaurant service. However, a person who is providing service in relation to extending deposits and receiving consideration in the form of interest, for him, exemption is allowed. Right? That will not be considered for the purpose of eligibility criteria and also for the purpose of calculating turnover. In aggregate turnover definition, that interest income received will not be included. That's the clarification. That's only for the purpose of section 10. In normal aggregate turnover definition, it will be included. Correct? Only for the purpose of section 10. Yes. However, having said that, even though we say supplier of service cannot go under 10.1 or 10.2, there is, again, they have given some exception by stating that if you are a marginal service provider, for example, you are a dealer in air conditioners, you are selling ACs, along with that, you also provide installation service, which is a part of it, right? For which you charge some consideration. So if you're a marginal service provider, I'll give you exemption. However, that's income related to that service cannot exceed 10% of your turnover or 5 lakh rupees, whichever is higher. If the service related revenues within that limit, you're still eligible for 10.1 or 10.2. That is 1%, 1% or 5% taxation. Right? If your turnover exceeds, your turnover related to services exceeds that, you're not eligible for 10.1 or 10.2. Am I eligible for 10.2A?
Yes.
Yes, because see, 10.2A related to services is the wordings that we have used for our understanding. If we read the Bare Act for 10.2A, what does it say? It says those who are ineligible under 10.1 and 10.2. So I became ineligible under 10.1 and 10.2 because I exceeded my turnover of services beyond that threshold limit. Even though I supply some goods, since I am ineligible under 10.1 and 10.2, I am eligible under 10.2A, provided turnover is below 50 lakh. Clear? Yes, this is section 10. Right? So with that, we are done with the second chapter, charge. Till here, everyone? Yes. The third chapter that we discussed, place of supply. Right? Here, till now, we discussed about CGST Act, section 7, 8, 9, 10. Place of supply discussion happens in IGST Act. Right? We'll be discussing 4 sections, 10, 11, 12, and 13. Section 10 and 11 relates to goods, 12 and 13 relates to services. Section 10 in India, 11 imports and export. Section 12 when both location of supplier and location recipient in India. 13 either of it is outside India. Location of supplier or location of recipient is outside India. That is section 13. These are the 4 sections, correct? Section 10, when I say place of supply of goods, now here, normally we will look into, to identify the place of supply, we were looking into whether the goods are movable, where there is movement of goods or not. If there is movement of goods, the destination where the movement terminates, stops. Where there is no movement of goods, the location of the goods at the time of supply, that itself will be the place of supply. However, this provision does not apply. This provision does not apply for B2C supply over the counter. This is the new provision that they have brought in 10.1 CA. Correct, October 23 amendment. So as per 10.1 CA, what it says, it overrides 10.1 and 10C. That is what it says. Notwithstanding anything contained in 10.1 and 10C, supplies made to an unregistered person over the counter. What do we understand by over the counter? He goes to another state, purchase the goods, and takes it back to his home state. So that is over the counter sales. In such cases, what would be the place of supply? Place of supply will depend on whether you know about the recipient. If you know the address of the recipient, if the address of the recipient is available, such address. Here, when I say address, even name of the state is sufficient. If address of the recipient is not available, then your address, supplier's address. That is for B2C, right? Over the counter B2C. In all other cases for goods, we'll be checking whether there is movement of goods or not. That's the main principle that we'll be applying. Only for B2C over the counter, we'll look into recipient's address available or not. This is similar to service related place of supply. Correct, service related, that's how we determine the place of supply for B2C. Address of the recipient available, address of the recipient not available. So same principle will be applied even for OTC, over the counter sales for goods. In this movement of goods related, we have a special case 10.1B, bill to ship to. Correct. In bill to ship to scenario, even though there is movement of goods once, there are two supplies. One, supply made by Mr. A to Mr. B. Second, supply is made by Mr. C to Mr. B to Mr. C. Mr. B ordered the goods from Mr. A, but Mr. B said, don't send it to me, send it to Mr. C. So in this case, from the premise of A, it goes to the premises of C. However, what would be the place of supply? Place of supply, even though the movement terminated in C's place of supply will be registered place of business of third person, Mr. B, the person who is acting as an intermediary. Because I'll explain this. Mr. A, Mr. B, and Mr. C. Now, Mr. B is the intermediary here. He takes the order from Mr. C. He gives the order to Mr. A, but he says, don't give the goods to me, directly send it to C. In this case, there are two supplies. One, supply made by, see, for Mr. A, he is supplying to Mr. B only because he has given order to Mr. A. Correct? So, for Mr. A supplying to Mr. B and Mr. B supplying to Mr. C, there are two supplies. For the first supply, Mr. A to Mr. B, even though the goods terminated at C's place, we have to go with, as per 10.1B, the registered place of the third person, Mr. B. Whereas in the second supply, Mr. B to Mr. C, the normal provisions of 10.1A applies, the location where goods terminated, place of Mr. C. So two supplies. So we will have two places of supplies, one of Mr. B, one of Mr. C. Everyone understanding?
Yes, sir.
See, simple. If this bill to ship to concept was not there, what would have happened? Mr. A would have sent it to Mr. B. Mr. B would have sent it to Mr. C, the same goods. So in that case, for the first supply, where did the goods terminated movement? Mr. B place. Second supply, where did the goods terminate their movement? Mr. C's place. So ultimately, place of supply comes back to whatever we have discussed in 10.1B. Everyone clear with this?
Yes, sir.
Yes, sir.
Yes, that was about bill to ship to. Then in some cases, supply of goods might require some performance like installation, right? Installation service. In such cases, the place of supply would be the location where such goods are installed, place where the service activity is performed. Similarly, if goods are being supplied on board a conveyance, train, right, inside the train, at the time of travel, if you are selling the goods on board a conveyance, in that case, place of supply will not be the place where you sold it during transit. No, place of supply will be the place where the goods were boarded on the conveyance, right, where it was taken on board. That would be the place of supply. This is what is discussed in section 10. Section 11, simple. For import, see, section 11 is outside India, import or export. For import of goods, it is location of the importer. India, import for export of goods, it is the location outside India. That is where the goods are being transported outside India. Simple. That would be the place of supply. Section 11. Coming to section 12. Place of supply of services. With regard to place of supply of services, section 12, what it says, there are few services where place of supply has been given specifically. For all other services, default rule under 12.2 applies. What is the default rule? You have to check whether the service recipient is registered or not. If service recipient is registered, his registered address would be the place of supply. If service recipient is not registered, then you have to check whether you have the address or not. If address of the recipient is available, such address. If address of the recipient is not available, location of the supplier. This is the general rule. General rule applicable under section 12.2. Whereas there are various specific provisions also. For example, service in relation to immovable property. Right, service in relation to immovable property. There could be various services. It could be architect planning, right? Architect service, interior design, decoration service. It could be construction service. Correct, various services in relation to immovable property or accommodation service, renting of immovable property. All this gets covered. What is the place of supply? Location of the immovable property. Right, location of the immovable property would be the place of supply. Yes, what if that immovable property is located in multiple states? There are various discussions, right? There are various circumstances. If property itself is located in multiple states, we go with the area. If service is provided in multiple states, in immovable properties located in multiple states, for example, I take up accommodation service in Taj Hotel, Delhi 2 days, Bangalore 2 days. So in that case, I paid only once. How do they bifurcate? Depending on the number of nights stayed. Correct, in each of the states. So there are various specific provisions for that. What if there is multiple states? But underlying principle for immovable property, any service in relation to immovable property, place of supply, location of the immovable property. Second, next one, related to performance based, like restaurant service, catering, fitness, gym training, beauty treatment, etc. Location where that performance is performed, that activity is performed. Correct, that's how the place of supply is determined. Performance based. See, performance is important there. Therefore, location where that performance is done, that would be the place of supply. Similarly, training service, training or performance appraisal, that depends on whether registered or not recipient. If recipient is registered, when recipient is registered, default location of the recipient. If recipient is not registered, what happens in case of training? If recipient is unregistered, it would be the place where that service is performed, that training is performed. So if you are giving a training service to ABC Limited, Mumbai, if ABC Limited, Mumbai, training is provided in Kolkata, ABC Limited, Mumbai, registered in Mumbai. Now, if ABC Limited was registered in Mumbai, even if service is provided in Kolkata, place of supply will be Mumbai, registered person. If ABC Limited was not registered under GST, right, services provided in Kolkata, then place of supply will be Kolkata. Right. However, this bifurcation of B2B and B2C is not there in performance based, only in case of training. Only in case of training, we have this bifurcation. For others, restaurant service, where beauty treatment, gym, that fitness related, that is not applicable. Similarly, we discussed about admission to events, tickets, admission to events, simple, place where that event is held. Correct, that should be the place of supply. Then event organization, event organizing service. For event organizing service, again I have to fall back to registered or unregistered. If they're registered, location of the recipient. If unregistered, what did we do for training?
Best.
Yes, where the training was performed. Here same, where the event was held. Right? If unregistered, place of the event. However, we have one condition here. If the event is held outside India, then location of supplier, location of recipient. If event is held outside India, then location of recipient. For example, Mr. A is in India. Okay, Mr. A wants to do a particular event in Dubai. In that case, he is taking up the help of ABC Limited event organizers. So here, Mr. A is unregistered. Since event is happening outside India, location is location of Mr. A, his address. Okay. However, if Mr. A was registered, irrespective of event happens in Dubai or Mumbai or Delhi, it would be his location of the recipient. Okay, that's how for event organization, the place of supply would be determined. Similar to goods, we have one point here, service on board a conveyance. In case of service on board a conveyance, what would be the place of supply? In goods, what did we discuss? It's the place where goods were boarded on the conveyance. For service,
First schedule.
very good. Here we cannot say go place where service was boarded on the conveyance. That's not possible. Therefore, they are telling it's not possible for you to determine a particular place. Go with the first scheduled point of departure of that conveyance, irrespective of where the service provider boarded, service recipient boarded. That doesn't matter, right? If there is a train from Cochin to Delhi, in between someone boarded in Bangalore, and he provided that service inside. So let's say in Jaipur, still place of supply will be Cochin. First scheduled point of departure of the conveyance. Clear? Yes. Then related to, we had the discussions related to telecommunication, fixed lines, if there is a prepaid related service, correct? So various discussions we had. We'll quickly look into that. Telecommunication. Here. Okay. Telecommunication service, we come to note H. Yes. Fixed, if there is fixed telecommunication line, lease circuit, internet lease circuit, cable or dish antenna, easy. Right? Landlines or dish, etc. It's easy. Location where that device is installed. That would be the place of supply. Easy. Whereas in case of wireless connections, they divide it into prepaid and postpaid. In case of postpaid, bill will go on a periodical basis, billing address. Right? If billing address is not available, if they're sending through mail, then location of supplier of service. If it is prepaid connection, then how will you make the payment? Either you recharge. So recharge how? Either through a selling agent or you yourselves will recharge through online modes, etc. So in that case, address of that selling agent or reseller or a distributor, etc. If you yourselves do it online, location of the recipient in the records of the supplier service. That is the place of supply for telecommunication. For banking, insurance, what would be the place of supply? In case of banking and insurance, KYC is mandatory. Correct? So, location of the recipient of service in the records of the supplier. However, in some cases, if it should not be the scenario, but still, there could be one scenario in case of banks where he goes to he's not an account holder in that bank, but still he goes to that bank, gives cash and get DD, demand draft. Right? In that case, yes, possible. Location of the recipient records is not available with the supplier. In that case, location of the supplier itself. So banks, financial institutions, stockbroking and insurance, normally it is location of recipient. If not available, then location of supplier of service. Then the last discussion, important one, is passenger transportation related. In relation to passenger transportation, first point, there are two ways in which this can happen. One, you will purchase ticket for that specific travel, or you would have a card wherein you would have recharged amount. For example, metro. Right? Whenever you travel, you will use that card for travel. So in case of normal passenger transportation where you purchase a ticket and travel, at each such supply, they know where you are traveling, from where you are traveling. Correct. So for normal passenger transportation, if recipient is registered, location of recipient straight away. If recipient is unregistered, from where you are boarding it, location where passenger embarks on the conveyance for a continuous journey. Right, from Bangalore to Hyderabad, you're boarding in Bangalore, so Bangalore would be the place of supply. Whereas issue of right to passage, that is that metro card that I am talking about. In that case, if recipient is registered, no problem, location of recipient. If recipient is unregistered, right, it's unregistered. If recipient is unregistered, when you recharge that card, the BMRCL people will not know in which station you will board, in which station you will drop out every day, correct, on a daily basis. It's at your discretion, right? So they'll check whether address is available in their records. If address is available, location of such unregistered person. If not available, location of supplier. See, BMRCL might not be the correct example for this because it runs only in Bangalore, Karnataka always. Whereas Delhi Metro goes up to Noida, which is in Uttar Pradesh. So in that case, this principle applies. Understanding?
Yes.
These are the provisions of section 12. Any doubts in this? No. Okay, coming to section 13. Section 13 talks about same place of supply of service. However, here either location of supplier or location of recipient is outside India. Okay, either it is export of service or it is import of service. That related discussion. So again, here we have a general rule. What is the general rule? General rule is location of the person receiving the service, location of the recipient. Here, see, in section 13, we will not look into whether they are registered, unregistered, because one of them is outside India. Right? That means one of them should be unregistered. Should be unregistered. So we'll not be looking into registered, unregistered discussion. So the general rule is location of the recipient, simple. If location of recipient is not available, location of supplier. Okay, that is the default rule. However, we have specific rules. Performance based, we have discussed. Location where services are actually performed, same. Right? Similar, the provisions are similar to section 12. However, there are some additions, some new some services that comes into picture here. Then services in relation to immovable property, same discussion. Place where immovable property is located. Admission related, place where the event is actually held. The only difference between 12 and 13 is we do not have that registered and unregistered bifurcation. Right? So admission related, place event is actually held. Services supplied by banking company, financial institution, NBFC, location of supplier, straightforward. Intermediary service, location of supplier. Who is this intermediary? Agent. Okay, agent. Now, for example, USA, let's say New York and London. There is a buyer in London. There is a seller in New York. You as an agent in India, agent in India facilitates this sale, wherein you connect with the buyer, you connect with the seller and ask the seller to supply it to London, for which you get commission. Right? You will be considered as intermediary for that service provided by you. That is intermediary service. Location of supplier of service would be the place of supply. Then hiring of transportation related, location of supplier of service. Passenger transportation, place where the passenger embarks on the conveyance. Simple, no registered, unregistered confusion here. Place where the passenger embarks on the conveyance for continuous journey. Service on board a conveyance, same, first schedule point of departure, same provision. OIDAR service. Now, this is new. We didn't discuss this in section 12. Correct? OIDAR. What is OIDAR? Online information database or retrieval. Database access or retrieval. So, supply of service through internet, through information technology. So, without use of IT, that service cannot be performed. Then it is called OIDAR service. For OIDAR service, it is always location of recipient. It is always location of recipient. And for this is one exception for import of service coming under RCM. OIDIR service, if it is provided to registered person, comes under RCM. If it is provided to unregistered person, what happens? OIDIR service provider himself has to take a registration in India and pay tax. Correct? For which we have a simplified registration system, SRS. For them, for AIDIR. Same applicability for money, online money gaming as well. Right? So these are the discussions under section 13. Clear? Yes, we also have some notified provisions under section 13, clause 13, R&D related to pharmaceutical sector, as well as we had the discussion on aircraft B2B MRO service, maintenance, repair and overhaul, right? B2B MRO services of aircraft as well as ships and vessels. That related location of the recipient would be the place of supply even for that they have notified. This is place of supply. These are the 4 sections, 10, 11, 12, 13 of IGST Act. Fairly understood? Yes? Clear? Yes. Then, okay, any doubts still here? Okay, fine. So next chapter, we have understood what is supply, when it is taxable, when it is charged for tax, if charged forward or reverse, and what would be the place of supply. So place of supply helps us to determine whether it is interstate or intrastate. Now, coming to the next discussion, when it would be taxed, time of supply. With regard to time of supply, again, I have to come back to CGST. We have 2 sections, section 12, section 13. Section 12 is for
Goods.
goods, correct. Time of supply. Section 12 is for goods. Section 13 is for services. Now, section 12 and 13 go hand in hand. Only 12.2 and 12.3, 12.2, 12.3, 13.2, 13.3, the provisions are a little different. Correct? 12.2 talks about forward charge of goods. 13.2 talks about forward charge of services. What is the time of supply? In case of goods, the time of supply will be the date of invoice or the due date on which invoice should have been issued. Due date on which invoice should have been issued. Whichever is earlier. Here, we do not talk about money when the amount is received at all, because for goods, receipt of advance exemption is there. However, this exemption is not applicable to online money gaming, or for that matter, specified actionable claims. Right? When they brought in that specified actionable claims, they have brought in this notification also. Specified actionable claims, this exemption is not applicable, meaning on receipt basis also taxable. On advance also it is taxable. Whereas for services, no such relaxation. So what should we do? We have to check in case of service forward charge, whether invoice is issued within the due date. If the answer is yes, then time of supply will be date of receipt of money or date of invoice, whichever is earlier. If not issued within the due date, then date of receipt or date of
Provision of service.
Provision of service.
very good. Date of provision of service, whichever is earlier. Okay, fine. What is this due date of issuance of invoice? In case of goods, the due date of issuance of invoice shall be if there is removal of goods, that is movement of goods. If there is removal of goods, date of removal, right? Date of removal, when we are sending the goods from Bangalore to Delhi, not the date on which the goods reached Delhi, the date on which the goods were removed from the place of business from Bangalore. That would be the date, right? That would be the due date on which invoice have to be issued if there is no removal of goods. That is, other cases, it would be date of making available the goods to the recipient. Date of making available of the goods to the recipient. In some cases, it could be continuous supply of goods. Right? You'll be continuously supplying a particular product on a daily basis, on a weekly basis, on a monthly basis. Continuous. In that case, periodically you will settle. So that settlement, that is date of periodical statement issued. If there is no statement issued, date of periodical payment. That would be the time of supply. That is the due date for issuance of invoice. Similarly, in case of sale on approval basis. In case of sale on approval basis, you have what's the time limit available for us to get the approval?
6 months.
6 months.
6 months. So, date of actual supply or 6 months from the date of removal, whichever is earlier. 6 months from the date of removal, whichever is earlier. Whereas in case of service again, we are talking about whether invoice is issued within the due date. Correct? Normally for services, due date is
30 days.
yes, 30 days from the date of provision of service. However, in case of banks, financial institutions, NBFCs, and insurance companies, they have
45.
45 days from the date of provision of service. Specifically, banks, financial institution, NBFC, insurance company, plus telecom companies, if they are providing the service to distinct persons, then invoice can be issued within
End of the quarter.
yes, good Amit. Within the end of the quarter. End of the quarter. That's the time limit available. However, if we have continuous supply of service, then you have to see whether there is a due date available for payment. If due date is ascertainable, then such due date itself will be the date of issuance of invoice. If due date is not ascertainable, then
Completion of service.
receipt of money. Receipt of money consideration. Whereas, if payment is linked to completion, that is milestone based, right? 20% you complete, I'll release this so many amount. That's how. Milestone based, then completion of that milestone would be the due date of issuance of invoice. Completion of the milestone. Are we clear? Understanding?
Yes.
Right? These are not new things, right? We have already learned this. It's just a revision. All these provisions, yes, place of supply, yes, I agree. But all other provisions we have also learnt in intermediate. We deleted it, and again we have learnt in final. Again, we are having the revision of the same, right? So it's definitely nothing new that we are doing here. So that's the reason. It's a revision, so we have to go a little fast. Am I too fast? No. Okay, right. So this is 12.2 and 13.2. Time of supply of goods, time of supply of service in case of forward charge. Then 12.3 and 13.3 talks about reverse charge. 12.3 says date of receipt of goods, date of payment or 31st day from the date of invoice. 31st day from the date of invoice, whichever is earlier. In case of, this is 12.3. In case of 13.3, we don't have date of receipt of service. Instead, we only have the other two. Date of payment, or instead of 31, 61. 61st day from the date of invoice. This is very important. Okay, normally, not only in IBS, in IDT, normally they'll give you RCM related provisions in output tax calculation, right? So there, they would have given you an invoice of previous month. They say payment is not yet done in this month. So in that case, you have to identify, you have to apply this provision 13.3 and identify the time of supply and then see whether it is chargeable to tax in that month or not. So 61st day from the date of invoice, whichever is earlier. Okay, so whenever we say date of receipt, whenever we say date of payment, what is that date? It is date of recording such payment in the books or date of debit in case of payment or credit in case of receipt in bank account, whichever is earlier. Whichever is earlier. Are we clear?
Yes, sir.
That is 12.3 and 13.3. Okay, next 12.4, 12.5, 12.6. 13.4, 13.5, 13.6. Same provisions. 12.4 and 13.4 talks about vouchers. They divide that vouchers into two parts or two categories. Specific voucher, general voucher. Right? When I say specific voucher, at the time of issuance of voucher itself, I know what is the product or what is the service that I can avail. I cannot avail any other service other than that. So, or I cannot purchase any other goods other than that. So, specific voucher, it would be date of issue of voucher itself at the time of issue. That would be the time of supply. Date of issuance of voucher. Whereas, in case of general voucher, it can be used for purchasing any item available in that particular shop or avail any service that is available. In that case, you will get to know which is that specific product or service availed only once the voucher is redeemed. So, date of redemption of voucher. Date of redemption of the voucher. This applies to both goods and services, 12.4 and 13.4. Similarly, 12.5, 13.5, residual. If you could not identify the time of supplies in any of the above three, 12.2, 12.3, 12.4, come to 12.5, residual. Here, related to that particular payment, if periodical returns are filed, where periodical returns are filed, then due date of such return itself will be the time of supply. If not, then date on which GST is paid. That date itself is the time of supply. Date on which GST is paid. That's the time of supply. Next, last one, 12/6 and 13/6. Okay, fine. You have identified the time of supply of that particular supply using any of the above provisions, 12/2, 12/3, 12/4, 12/5. Subsequently, there was a increase or addition to the value of supply. Addition in the value of supply. Example, interest for delayed payment. There was a sale of goods. 30 days credit time was also given. Okay, so 30 days time was given, sale of goods. So when would be the time of supply for goods? Applying 12/2, it should be the date of removal of such goods from the premise. Correct. So on that date, it was considered as supply and tax was paid. Subsequently, they didn't pay it within 30 days. They paid it delay. So for that delay, they have paid interest. Now we have discussed that interest paid comes under the concept of composite supply, where principal supply is the sale of goods. Therefore, that interest is chargeable to tax. That would be added to the value of supply as per section 15(2). So what would be the time of supply for that interest received? If you consider the principal supply's time of supply itself, we did not pay tax at that time on that because we were not aware of that receipt. Now, if I have to consider that time of supply 1 month back, I have to pay interest for no fault of mine. So they are telling for this addition in value, go with receipt basis. Whenever such addition in value is realized, is received, that would be the time of supply, date of receipt. That's it. This is the provisions 12, section 12 and section 13. In this chapter, we have one more small discussion, section 14, which talks about what happens if there is a change in the rate of tax. Change in the rate of tax in between a supply, whether I have to apply new rate or the old rate. Okay, for which you have to divide or you have to identify 3 events. One is date of supply of the goods or service, when it was provided, when it was supplied. Second one, date of receipt or payment of money. And third one, the date of invoice. These are the 3 events. During which time period 2 or more events occur. At that time period, what was the prevailing rate of tax? That rate of tax is applicable. Meaning, if 2 or more events occur when old rate of tax was applicable, then old rate will apply. For example, you have supplied the service. You have supplied the service on 14th of January. You had 30 days time. Let's say it comes out 14th of February to issue the invoice. 30 days time to issue the invoice. On 31st of January, with effect from 1st of February, they changed the rate of tax for that particular service from 18% to 12%, let's say, hypothetically. Now, in this point, yes, you have provided the service on 14th of January. Now, whether 18% applicable or 12% applicable depends on, see, you have raised the invoice, let's say, on 14th of January, the last date, due date. Okay, date of invoice date. Depends on when the amount is received. If the amount is received before 1st February, then 2 events, date of supply of service and date of receipt is happening before the change in rate. That is, it is happening at the time old rate was prevailing, hence old rate would be applicable. If date of receipt or if date of receipt is happening after 1st February, 2 events are happening after the change in rate, date of receipt and date of invoice. So new rate will be applicable. Okay, that is what section 14 talks about. In that case, what would be the time of supply? The time of supply will be date of provision of service or date of receipt, whichever is earlier, if receipt happens before 31st Jan. If receipt happens after 31st Jan, date of invoice or date of receipt, whichever is it. Understanding? Yes? Clear with this? Section 14. Yes? Okay. So in CGST Act, we discussed about 7, 8, 9, 10, 12, 13, 14. Section 11 is pending, which is exemption. In IGST, we discussed 10, 11, 12, and 13. Correct?
Yes.
Yes. With this, we can go to section 11. What is section 11 of CGST Act?
Exemption.
Yes, exemption. Now, exemption, again, we have exemption of goods, exemption of services. Exemption of goods, we have a list. Exemption of services also, we have a list through notification. But exemption of goods, similar to RCM, it is straightforward. Those goods are exempt, come what may. Whereas for services, especially in case of certain services, there are various conditions. Service recipient should be so and so, service provider should be so and so, correct? So there are various conditions for that exemption to apply. Therefore, exemption of services are more important for us from examination point of view as well. Okay, and even in case studies as well, they focus more on exemption of services. Again, there are lists of exemptions given. It's not that all exemptions are important. Wherever conditions are there, those exemptions will be important. For example, the first one, first entry number 1 in the exemption notification, services by 12AA or 12AB registered entity. When it will be exempt? Only if it is used for by way of, yes, charitable activities, correct? Only then, only if it is by way of charitable activities. There is a definition, charitable activities. If you remember, the charitable activities definition is there in that notification itself. So only if it is used by way of charitable activities, that is exempt. 12AA, 12AB registered entity. That is the first one. Second one, religious ceremony, conduct of religious ceremony. Here there is no condition. Right? Conduct of religious ceremony always exempt. Third one, renting of religious precinct. Here, what is the condition? That property should be owned by whom? Specify that entity registered under specified provisions of income tax. It could be 12AA, it could be 12AB, it could be 1023C, or it could be 12 BBA, correct? Various other sections. So specified sections of Income Tax Act, that the entity should be registered, and it is renting such precincts related to religious entity, religious property. There we have a limit, correct? If they are renting rooms, then
1,000.
yes, up to rupees 1,000 per day. If they are renting community halls, Kalyana Mandapam, etc., then
10,000.
10,000.
yes, 10,000 rupees per day. If they are renting out shops besides in the precincts of the religious place, then
10,000 per month.
yes, 10,000 rupees per month. Then we'll have 10,000 rupees per month. For community halls, 10,000 rupees per day. For religious shops, commercial shops, it would be 10,000 rupees per month. Correct. This is condition specific, right? So renting of religious precincts. Then pilgrimage, religious pilgrimages. Not all are covered. Only if it is organized by two. One is KVMN related to
Manas.
Kailash Manas Sarovar, correct? KVMN is an entity established by Uttarakhand government. It's a entity part of Uttarakhand government, state government undertaking, or Hajj committees, national Hajj committee or state level Hajj committees in related to Hajj pilgrimage. Only these two are exempt. Then training or coaching service. Two discussions we had. Training or coaching. First was related to recreational activities in relation to art or culture. Here, who is the provider? Who is the trainer? Who should be the trainer? Individual. Individual should be the trainer. Second, training or coaching service in relation to sports. Who should be the trainer? Correct, Amit. Yes. 12AB, 12AB registered entity. So for recreational activities in relation to art or culture, trainer should be individual. For sports related training, trainer should be 12A, 12AB registered entity. Only then exemption is available. Correct? That's training or coaching related. Then agricultural related, various agriculture related services we have discussed. Even further processing related to agricultural produce is also exempt, provided it does not alter the nature of the agricultural produce and to make it marketable for primary market, right? Not secondary market, primary market only. Correct? Then services in relation to educational institution. Important discussion that we had. Related to educational institution, there are two services exempt. One, service provided by educational institution. Two, its students, staff, faculties. Second, service provided by an educational institution in relation to conducting entrance exam. These two are exempt. Services provided by educational institution. Second, services provided to an educational institution, inputs for the educational institution, it would be exempt in the following manner, for which we need to first understand what is an educational institution. Educational institution is divided into three parts. An institute which provides preschool up to higher secondary, one such educational institution. Second, educational institution imparting education or training for the purpose of getting a qualification recognized by law in India, that is the UG and PGs, correct? Degree, higher studies. Then third one is approved vocational education courses to get employment, skill based. Now, these three categories of educational institutions are there. With regarding the input service exempt, we have 5 input services provided. First one, transportation. Transportation of students, faculties, and staff. Second one, catering service, including midday meals. Third one, housekeeping, cleaning, security. Housekeeping, security, cleaning. The point here is only in the premise of the educational institution. Then fourth one is service in relation to admission and conduct of examination. And last one, online journals. Okay, so here the first 3 services are exempt only if it is provided to an educational institution which is providing preschool up to higher secondary. That is the first category of educational institution only. Preschool up to higher secondary. Service in relation to admission and conduct of examination provided to all educational institutions are exempt. All educational institutions. Service in relation to online journals are exempt only if it is provided to entities imparting, educational institutions imparting qualification based education. That is the second category of educational institution. This is input service exempt. Right? The transporter who is providing transportation service of students will be exempt if he is providing transportation to an educational institution up to high school. However, if he provides the same bus for others, it would be taxable. Right? So this is service specific. Till here, understood? Yes, educational institution related. Yes. Then we also discussed about healthcare service. Healthcare service provided by 3 clinical establishments, authorized medical practitioners, and paramedics are exempt. We also discussed about healthcare definition, healthcare service. It should be in relation to, it could either be a treatment, it could be a care, right? In relation to a medical system recognized in India, only then it would be exempt. Right? It includes transportation of patients through ambulance. That is also covered. However, in relation to room charges, what is the limit? Inpatient, for an inpatient, what is the limit for room charges?
10,000.
5,000.
5,000. It's 5,000 rupees per day, right? So 5,000 rupees per day. However, that limit of 5,000 does not apply to ICU, CCU, NICU, ICCU, right? All critical care centers. That 5,000, that limit does not apply. Else, it would be exempt only if it is up to 5,000. If it's beyond 5,000, the entire room charges would be taxable. Then services provided by government, right? Government entities, other than those exemptions that we had in RCM also, Department of Post, Indian Railways, in relation to aircraft or vessel, transportation of goods or passengers, services provided to business entity beyond the threshold. Why services provided to business entity beyond the threshold is excluded here? Services provided by central government, state government, union territory, local authority to a business entity whose turnover is exceeding the threshold. Why it is not exempt?
RCM.
Very good. RCM applies. Right? In RCM entry, we had discussed that. RCM is applicable, therefore it is not exempt. Whereas in the first 3 cases, Department of Post, Indian Railways, related to aircraft, vessel, etc., and transportation of goods and passengers, forward charge mechanism will apply. Yes. Then old age homes related. Old age homes run by 2 people, either central government or state government, or 12AA registered entities, right? Either it should be run by central government, state government, or 12AA registered entities. Then it would be exempt, provided that old age home is for residents of 60 plus years, and consideration charged is up to
25.
25,000 per month per member. Then exemption is available. Right, so multiple conditions with regard to old age homes, important. Then related to Department of Post, if it's a normal service in relation to postcard, inland letter, book post, etc., ordinary post, where weight of that post is less than 10 grams, then it is exempt. Else, all other registered post, speed post, etc., all those other services provided by post will be taxable under forward charge. Correct? Taxable under forward charge. Then passenger transportation service related, there are multiple discussions there, but important ones. Air travel by economic class, if travel to or travel from northeastern states, travel to or travel from northeastern states, that is exempt, economic class only. Then we also had non-AC contract carriage, non-AC stage carriage, correct? Contract carriage other than radio taxi, provided it should not be used for conducted tour. It's not for tourism. Then non-AC stage carriage exempt. Railways, when it would be exempt? Railways, if it is other than first class AC coach. Other than first class and AC coach, all other coaches are exempt. Then transportation of goods related, beautiful discussion we had. Transportation of goods. There were multiple entries discussing transportation of goods. We can have one single chart for that. Transportation of goods can be classified into 3 parts. Transportation of goods by road. Transportation of goods by inland waterways. Transportation of goods by rail or vessels. If it is by rail or vessels, it is exempt only if it is specified goods. What is the specified goods? In GTA discussion, we discussed, right, that newspapers, natural, in relation to natural calamity, relief materials, defense related, there is a list of items given in the exemption entry. So only if it is that goods being transported, it is exempt, else it is taxable. Inland waterways, whatever you are transporting, always exempt. Always exempt. Transportation by road can happen 3 ways. One, through a GTA. Two, through a courier agency. Three, others. An individual driver who is not a GTA, individual tempos, lorries, etc. Now, in case of others, it is always exempt. In case of couriers, it is always taxable. In case of GTA, whatever we discussed earlier, right? If it is specified services, specified goods being transported, exempt. If it is other than the specified goods being provided to registered person, unregistered person. If it is provided to unregistered person, in that unregistered persons, if we have specified persons like company, which is not registered in GST, does it come under specified persons for the purpose of GTA?
Yes.
Yes. Factories, societies, partnership firm, those are irrespective of whether they are registered or not, they come under specified persons category. Taxable. RCM or FCM depends on the GTA option. If they are other than the specified persons, a normal individual, exempt. If supplied to a registered person, then if it is only TDS registration, exempt. If it is other registered persons, taxable. Other registered persons, then it would be taxable. Clear? This is with regard to transportation of goods. Then few other discussions. Anyone still writing this? No. Completed. Done. Then few other discussions, few other exemptions that we have. First one is service in relation to extending loans, interest that we receive, that is exempt. Correct. Here only extending loans or discounting. So only discount and interest is exempt. All other bank charges, etc., is taxable. Processing charges, all those are taxable. Business facilitator and business correspondent services are exempt only if they are providing such service in rural areas. If they're providing the services in urban area, if it is a business facilitator, RCM, business correspondent, forward charge, agent to a business correspondent, RCM. Correct? Yes. Then services provided to central government, state government, union territory, local authority. If it is a pure service, no goods involved. If it's a pure service provided to central government, state government, local authority, union territory, exempt. If it is a composite service, meaning you also have some goods along with that service, that would be exempt only if the goods component is up to
25%.
Very good, Amit. Yes, 25% of the total value, right? For example, you have taken the contract of maintaining street lights. So the provision of the maintaining street lights is a service that you are providing. It's a supply of service. However, in that contract it says whenever any of the bulbs gets damaged, you have to replace the bulb. So that is goods. So here, if the supply of goods is up to 25% of the total value of supply, it is exempt. If it is beyond 25%, taxable. Are we understanding? Yes. Then, performance of an artist, not always exempt. That performance should be in relation to folk or classical art. Correct? Folk or classical art, form of music, dance, or theater, and consideration charges up to
1,50,000.
1,50,000. Yes. Consideration charge up to 1,50,000, only then it is exempt. However, if the same performance is done as a brand ambassador, not exempt. Right? It should be pure art form, pure cultural performance in relation to music, art, music, dance, or theater, up to 1,50,000 exempt. Okay, that is performance related. Then service provided by association, resident welfare association to its members, that would be exempt if
7,500.
1,500.
share of contribution per member is up to 7,500 per month. Correct? Per month per member. So here we had discussed a couple of points in relation to this resident welfare associations, apartments. The turnover of the resident welfare association is within the threshold. And irrespective of share of contribution of the members, not taxable. Because the resident welfare association is not a taxable person. Therefore, it's not a taxable supply. Because its threshold is within the limit. Turnover is within the threshold. So, irrespective of share of contribution, not taxable. Turnover of resident welfare association exceeds the threshold, it becomes taxable person. In that case, contribution up to rupees 7,500 per month per member, exempt. Contribution exceeding rupees 7,500 per month per member, taxable. Per month per member, taxable. Clear? Yes. Now, similarly, services provided by other associations like trade unions, etc., that would also be exempt if the membership charges collected by the association from the members is up to rupees 1,000 per member per annum. 1,000 per member per annum membership fees collection, then it would not be taxable. It would be exempt. Yes. Then the last one, the last discussion in this chapter is with regard to renting of residential property. So we discussed the same in RCM as well, right? For commercial, it is taxable unless the service provider himself is not a taxable person. If his turnover is itself is within the threshold limit, it is not taxable, right? Whereas in case of residential, we have to look who is the service recipient. If service recipient is registered and he is not using it for his personal stay, then taxable under RCM. If service recipient is unregistered, residential dwelling rented to an unregistered person.
Exempt.
Exempt, correct? It is exempt. Yes, that's it. Right? These are the important points, important discussions under the chapter of exemption. Okay, so with that, we completed how many chapters? 4 chapters. Correct? 4 or 5? 4, 5, yes. Supply, charge, time of supply, place of supply, and exemptions. One more small chapter that we have, whatever extent possible, we'll discuss today. Value of supply. Value of supply, only one section, section 15. Right? It has 2 parts. Section 15, 1, 2, 3. Section 15, 4 and 5. 15, 1, 2, 3 applies only if that supply is solely for consideration in money and between unrelated persons, right? Strangers. Only then 15, 1, 2, 3 applies. What is 15, 1, 2, 3 telling us? 15, 1 says whatever amount you charge in the invoice, that itself is the transaction value. To that, you have to add something which is discussed in 15.2 and you have to reduce something which is discussed in 15.3. Correct? Whereas if it is not for solely for monetary consideration, or if it is with related parties, then 15.4 says I have rules. It starts from rule 27, 27, 28, 29, 30, 31. And section 15.5 says even if it comes under the provisions of 15, 1, 2, 3, it satisfies it satisfies both the conditions. It is fully for monetary consideration, unrelated persons. Still, I have some notified services for which I have brought in some rules under Rule 32. Those service provider has an option either to go under 15, 1, 2, 3 or choose this rule. Right? We had currency related, life insurance related, right? So various services which we can discuss one by one later. Now, what does 15.1, 2, 3 say? 15.1 says whatever amount charged itself, that itself is a transaction value. 15.2 says we have to add something, additions. What are the additions? First one, taxes other than GST. Only if it is recovered. Right? Now, as a landlord, if I am recovering the municipal tax from the tenant, then that has to be added to the value of supply. If I'm paying municipal tax, but I'm not recovering it from the tenant, if it is my cost, that should not be added to the value of supply for the purpose of the rental service. Then third party payment. Payment made to a third person on behalf of the supplier. For example, Mr. A provides supplies goods to Mr. B. Mr. B has ordered to Mr. A and have agreed 1 lakh rupees as the consideration. Now, if Mr. A charges 1 lakh rupees, 1 lakh plus GST. So what Mr. A says, you pay me only 60,000 rupees. I have to pay Mr. C 40,000. You pay the balance 40,000 to him. So in this case, law says nothing doing. This 40,000 also should be added to this 60,000 so that the value of supply will be 1 lakh. Right? Payment made by the recipient to a third party on behalf of the supplier should be added to the value of supply. Added to the value of supply. Third one, incidental expenses, packing charges, loading, unloading charges, right? All those should be added. Subsidies. Should the subsidy be added? Depends on whether those subsidies are linked to the price or not. Right? If subsidies are directly linked to the price, meaning if I sell 5 electric vehicles, I'll be given subsidy of so and so per vehicle, so and so. So it is linked to price of that product individually, right? Directly linked to the price, not linked. If this not linked means how much ever electric vehicles you sell, I'll give you ad hoc subsidy of 50,000 rupees. That's not linked to the price, right? If it is not linked to the price, not to be added. You cannot add it to the price of a particular product, correct? Only if it is linked to price. If it is linked to price, you see from whom you are receiving it. If you are receiving it from central government or state government, not to be added. If you are receiving it from others, then it should be added. then it should be added. So price linked subsidy received from other than central government, state government should be added to the value. Understanding? Yes, that's subsidy. Then interest, whatever we learnt in time of supply 12/6, 13/6, interest etc. or late fee etc. received for delayed payment of consideration should also be added to the value. That is what is given under 15.2. Coming to 15.3, the last discussion before we wind up. Coming to 15.3, it says the following should be excluded. What is there in that following? Only one item, discount. Now, when should the discount be excluded? It depends on when the discount is given. When the discount is given. Discount given before or at the time of supply. Discount given after the supply, post supply discounts. If discount is given before or at the time of supply and such discount is shown in the invoice, such discount is shown in the invoice, then discount is deducted from the value of supply. That is, at the time of supply itself, in the invoice itself, specifically they show 1 lakh minus discount of 5,000, value 95,000. Then taxable value will be 95,000. Deduction of the discount should be made available. Whereas, if it is after the supply, post-supply discount, then such discount will be, deduction will be allowed only if 3 conditions are satisfied. Deduction allowed only if the following 3 conditions are satisfied. Condition number 1, the terms were existing at the time of supply. So at the time of supply itself, you knew that subsequently discount would be given. It's not a fresh discount that they're creating after the supply is over. Right? So the terms of such discount were existing at the time of supply. Discounts can be linked invoice wise. It's not that ad hoc discount of 5,000 rupees they are giving. No, they should give discount of 5% on all invoices. So that means you can link those discounts to invoice wise, can be linked invoice wise. Then proportionate ITC to be reversed by the recipient. Proportionate ITC to be reversed by the recipient, meaning by issuance of credit note. Correct, credit note should be issued to that extent. Yes, so proportionate ITC to be reversed by the recipient. If these 3 conditions are satisfied, then deduction will be allowed. If not, deduction will not be allowed in relation to that discount. Deduction from your output tax liability. Are we clear? Yes. So with this, the first part of the discussion is over with regard to value of supply, wherein straightforward case where monetary consideration plus unrelated party discussion. How do you calculate the value of supply? What if price is not the sole consideration and unrelated parties discussion as well as some notified supply. So we have multiple rules 27, 28, 29, 30, 31. 31 has 31A, 31B, 31C, new 31B and 31C new rules introduced for casinos and online money gaming. Correct? 31B and 31C. Then under section 32, we have rule 32, we have again multiple services, valuation of multiple services, which we will discuss and continue in the next class. Okay, so we have this discussion left, we have input tax credit left, and then we have registration, tax invoices, e-way bill, returns, right? Other provisions to be looked into, which we can continue in the next class. Clear? Everyone understood whatever we discussed?
Yes, sir.
We were able to recollect whatever we had learned in the class? Fine then, yes. We'll continue in the next class. Thank you.
Thank you, sir.
Thank you, sir.